Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 15th of June, 2020. This is episode number 1776. Freedom. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk-off sentiment across the board here. The markets are responding supposedly. It's hard to, people can always speculate about why the market is dropping, but uh, supposedly it's on a resurgence of COVID-19 infections, including one in Beijing that caused a shutdown over the weekend. The market's kind of continuing on last week's selling theme here. And so overall, we're looking at a market that is allocating to safety. The bonds are up 24 ticks, which is not big. 1 second. Which is not big. It's not a big move. Crude is the laggard today, down $1.43 on a July contract, trading at 34.83. Down 3.9%. 3.9%. Crude is compressed between two key levels, two key areas, 37.04 above and 34.45 below. Breakthrough 34.45 brings a lot of lower prices into play down into the 30 area. So we'll see how that plays out, but that's what we're looking at for today. The usual suspects are rallying, and except for gold is down for today, $25.80 from Friday's settlement in the August futures contract, trading at 1710.3 or down 1.55%. That's where that stands. In terms of the calendar for today, we had several releases from from Europe, Italy, and so on. U.S. New York Empire State Manufacturing Index came out. Not a huge mover. Not seeing anything on the calendar for today that is a big piece. Although balance of trade in the eurozone came in at 2.9 billion, surplus expected 16.2, so that was a big miss. Fed's Kaplan speaks at 11, and Fed's daily speaks at 11:30 today, and that's what we're looking at in terms of a calendar. Not much more out there that's of interest. Bank of Japan has a rate decision at 11 p.m. Eastern U.S. time. Let's look at what's high impact for the week. Tomorrow we have claimant count out of Great Britain, the ZEW Economic Sentiment Index out of Germany, real estate, retail sales tomorrow in the U.S. and balanced trade in Japan. Wednesday, inflation rate out of Great Britain and in Canada. Thursday, we're looking at BOE interest rate decision, Great Britain inflation rate out of Japan on Thursday, and that's it. Relatively light week. Relatively light week in terms of calendar events, but remember, this week has the roll and quad witching Friday in it. And the roll is doing something interesting. I'm going to show you this real quick here. It's important to monitor the roll, especially if you're using volume and volume delta. This is the CME site, and it's showing us the pace of the roll. This is the blue band, the light blue bands is really the min max, historical min max of, or the deviation from the normal pace of the roll. And then the dotted line in there, the dashed line, is the average. The orange or yellow, whatever that is, curry color, is the current roll. And the roll itself has been really tracking on just the outside of the min max, the min. It's below what we would expect. And then Friday, it looks almost like there was not much of a roll going on. For Friday to print the same as Thursday, that's very unusual. So we're deviating from the pace of the roll, which means that this is going to be a long roll and may carry until Friday before the volume is cleared up when expiration actually takes place. So this is kind of troublesome because normally we're done with the roll, the volume on the roll by about Wednesday afternoon, something like that. And we by then we would have 95% of the roll done, and we could go back to trading normal, using delta, relying on volume. But what this is saying is there's just a lag in the roll here, and it may drag out a little bit longer, which is not great. It just creates noise. It just means volume in the front month, which is September now, isn't going to be moving as quickly as we would want. So that's where that stands. In terms of review, let's take a look at what was expected on Friday. On Friday, I talked quite a bit about this 3077 area, if you recall. 3077. I expect the market to walk up to 3077, and I expected it to roll over and push down into the 3059 area and maybe close sideways. Did not expect much action on Friday. Expected it to be an inside day. The secondary it attempts to push higher, takes out the overnight high at that point, which was 3072.50, and then starts to move towards 3036. Well, Friday took care of the 3077 almost to the tick. And then it rolled over and pushed all the way below. It's quite incredible, the range we had on Friday. Totally unexpected. I was being too conservative. Clearly, this is what actually happened on Friday. This is what actually happened. You could see the high at 3076.75. Remember, I talked about 3077, which is a stock zone right there. This gray band right here is at 3077, and it just rolled over and pushed all the way down to the close for a bounce, and then once it bounced up, pushed down to the point of control, and then we managed to get a lower low, which was what was expected. If you recall, starting the review on Friday morning, I said, with a trend day down, with a point of control at the low, we expect the market to test the overnight low or the low in the overnight. And generally, we expect a continuation trade, which would mean that we would take out this low. We would get the impulse down, which was on Thursday, pullback, and then continuation before it decides to correct or continue again. And we managed to get it. So kudos to the market following the normal auction process. But we did get a pretty good bounce, pretty decent bounce, and we ended up closing above the mid of Friday, looking relatively strong and accepting this high volume area up here. Although we do have kind of a twin peaks here with the high volume area in the 3000 as well. This morning, though, the market is just not able to hold on to these prices. We open up and we push. The best we could do is push higher into 29.97.75. The market opened relatively negative and has pushed all the way down to the next naked point of control at 24.50 with a low print at 23.75. Sellers are still in control, and it's already pushed through the areas that I expected on the pullback. And so, which was 29.70 here, this very low volume node, which was tested on Friday at 71, and so today is looking kind of heavy, but we're holding near the overnight point of control. We'll look at the overnight in a second. And then on Friday, what was interesting is despite the 1, 2, 3 move down. Despite that, unfortunately, we're missing the element of delta. This is 1, 2, 3 right there, and then it's just consolidating. The delta was kind of positive, but unfortunately, we cannot rely on the delta, and that's why the pace of the roll is important, because it's just obscuring what the heck the true intent, what's backing up the price, but volume. And so, under normal circumstances, we would see this as, hey, the market is closing below the open, but the delta is higher. It looks like somebody's accumulating, or participants are accumulating or lifting on the way down. So this may run out of steam on the downside and start to roll back up. And if it rolls back up, then we're looking at that 3077, 3080 area again. So that's Friday. We had a I can't call it a trend day down. It pretty much has a valid value area on Friday, the 3039 and a quarter to 2989 half. But I don't know that that's relevant today unless we really push up into the prior day's range and start moving towards the point of control of Friday at 3011. So it would have to take out the overnight high and challenge a 3,000 millennium figure again. So that's the summary of Friday. If you feel like the market's really hard to read, then what I'll say is the market is really hard to read. It just is. There are some competing large large forces in play here, and it's kind of sloshing around here and there and everywhere. So that's where we stand. Here's the overnight session. We open in a gap down. Friday's close was up here, 24.25. We open at 29.83, so about 40 points lower. And then we go sideways in the Asian session and through the end of the Asian session and then the European session, we continue the sell-off and we test. This looks like a pretty solid test to me. It tapered out pretty good. We're holding at VWAP, mid, and point of control, all within a range. You can see those three lines here. There's your VWAP, it's the cyan. There's the mid of the session, it's the blue. And then the maroon line here is the volume point of control. And so to me, it looks like it's balancing out. It's currently balancing out, and it's doing so above the mid. With a nice shelf here, what looks like a relatively weak high. So here's the thing with this. This could tip either way. We have the prior day's low right here, this green line. This is prior day's low, the green line. And we're squished between mid VWAP and the prior day's low on top of VPOC. There's a fair amount of kind of compression going on here, and it's really prudent today to wait to see what the market wants to do. If it breaks this compression, I mean, look at the kurtosis or the sharpness of the volume on this profile. Let's clear this out a little bit. So you can see the sharpness here of this volume. It's a very concentrated volume. And so what we're going to see here, does it push and take out this high, or does it push the other way and take out this low and potentially continue? So we need to kind of keep an eye on what that is. The high here is 29.81, really 82. The low here is 29.55. Does it push through and continue to take out the overnight low, or does it push higher and take out the overnight high? Clear risk reward setup here this morning on the open, but we're going to need to wait to see what it does before we step in. Again, this week's trading is going to be obscured by this roll and expiration of quad witching Friday, which really, given the action that we've seen Wednesday, Thursday, Friday, that especially Thursday, combine that with a roll, it's just not the best situation in terms of technically reading what the market wants to do. Volume is, as you can see, volume is just blah, even picked up here just before the European session, but overall, it's not. We don't see clear spikes, clear interest one way or another. The volume overall in the overnight session has been heavy, 507,000. But again, that could be the result of rollover. Rollover is if you look at a a yearly or a daily chart, you'll notice that volume goes up and down, and that volume is between between rollover and expiration. So it's natural to see this higher volume spiking up. In terms of what we have in the order flow, we still see kind of sporadic. Unfortunately, the again, the roll is kind of messing with things. We're not seeing a clear liquidity sitting in the S&Ps as I pull in pull in the session. My throat, man. 1 second. I have to keep sipping on my ginger tea. So we could see that we had this box up here on the open from the overnight session that we tested from below. So this is kind of a giant zipper over here, and we tested it from below with liquidity at 29.80. We got to keep an eye on here. If we do push through the 29.80, we're looking at 29.90, and then likely the overnight high is next. So we've tested the breakout, the breakdown area. We've pulled back and tested that area. We want to see, does it come back and continue higher, or does it fall from here below 29.55 as mentioned? So, but we could see there's clear liquidity below in 29.20. Remember those 20 figures? They're still playing along. The 29.20 is well bid, and the 3,000 is well offered. The 29.80 is well offered, but that's recent, and that's what we see in terms of liquidity. So we have the 20 having been here, sitting here throughout the session, and the 3,000. Those are the bookends of today's session. And we're talking 45 points down and about 35 points up to bookend the session. So we'll see how that goes. Overall, it's I'm finding it not such an easy read. So that's where we stand in terms of how we are set up. Let's take a look at what we're expecting for today. A quick word, since it's Monday, beginning of the week, I want to remind everyone that EdgeClear was launched in April by myself and a group of brokers. I'm the founder and 100% owner. My intent with EdgeClear is to build brokerage as it should be. And we're bringing a lot of experience and knowledge and also some tech, which requires your support. Hopefully, you'll take a chance and take a look. It's edgeclear.com. I would appreciate your support. Now that I'm done with that plug, let's take a look at what we've got for the session here. Turn on our stock zones. The way we're setting up this morning, again, it's really important for us to keep an eye on those overnight levels. We're on top of the point of control, the overnight point of control here. The expectation from me this morning is really to the upside. Gun to my head, as I used to do this exercise a lot in the chat room, gun to your head, up or down from here. And gun to my head, I would say an open auction out of range that responds, and I'm looking for it to respond into that 29.80 area, consolidate, and push into the 3,000. That's what I'm looking for as a key element this morning. I'm looking for it to get tangled at the 3,000 quite a bit, maybe push to 05, and then sit here. And this will be the first resting day in the last couple of sessions. That'll be scenario one. It may push as far as the existing point of control. It is likely to get tangled here at the 29.80, 29.90 for a little bit. Value low. It's value low, and it's the area of this point of control right here. I'm expecting that it's likely to get tangled here for a little bit. and then push through to 3,000, take out some of that liquidity, break through, and then rest. That's the key scenario or the big trade idea of the day. Secondary open auction out of range, pushes up and is confronted by selling, gives us an impulse down, which pushes through to the 60 and then breaks the 55. Remember that 55 area from the overnight, and then starts to slide into this MC point of control at 29.39 before it flashes down and we get a bounce. Remember 29.20 right down here, 29.20 has that big liquidity. So there's a potential for it to push down here, poke through, and bounce at that point. This is what I'm looking for today is two key ideas of the day. Now it's our job to just read what is happening in front of us. Remember, the key ideas are just kind of maps or planned routes on a map that the market is potentially going to follow, but it's really important to read what's actually happening, right? But if, for example, I'll give you an example of why I create these. If, for example, the market is responsive and holds a bid and it's not able to fall back out of Friday's range and it holds this 29.71 and it continues to stay above there, I should not let go of that long until I get to 3,000 or so. The 3,000 is expected to be tested in this scenario, knowing that there's an obstacle here in the 29.90 area is outlined. So I'm not going to get shaken out of this trade. And that's the key here. And the reason we create these scenarios is to help us stay in the game, as opposed to, hey, it's gone my way. Oh my God, I've got 16 ticks in this trade. Let me get out. But you risk 16 ticks to get in. And so risking the same as what you would take out is not a very good plan. It's not a sustainable plan. A 1 hour risk is not a sustainable plan, in my opinion, unless you have a very high win rate. So that's where we stand. That's where we stand with these numbers. Follow what the market says. Just simply have a plan and an outline of where to go once the market starts working. I invite you again to reach out to edgeclear.com. Go to the chat widget or speak to one of the brokers. You'll be assigned a personal broker who you can talk to and call for help. And the company is competitive on commissions. We also have commission pools if you trade in a group. Reach out to us. We'd love to have your support. Take care.